Welcome, and thank you all for joining us today for this important topic. My name is Cindy Brown, and Matul Mehta and I will be your hosts today for the discussion on a critical topic that affects us all, but can often seem abstract and remote: the U.S. debt ceiling. This seemingly distant concept in economics has significant implications on our everyday lives, especially those of us who own our own business. So what is the debt ceiling? It is the legal limit that the federal government can use for borrowings. It allows Congress to manipulate and control the finances of the company. It allows for borrowing through treasury bonds, bills, and notes, and it funds the government obligations on the operations of the country and their obligations to third parties. Why do we have it? Well, it does give the government a limit, even though they don't seem to recognize that limit very often. It helps to control how the money is spent and what the national debt and budget are, but it's regularly adjusted to accommodate all those excess spendings. In fact, it's been raised 80 times since 1960. It was introduced in 1917 during World War I so that the government could issue bonds to help fund the global war. So the government can borrow money while maintaining some level of control over how much is borrowed over time. The current ceiling is $31.4 trillion, with a T, trillion dollars, and we're reaching the upper limits of that as we speak. Our debt has tripled since 2008. And let's look at some of the things that have happened where the government has handed out money to keep us afloat. Right? 2008, the great housing crisis, and the global governments have managed interest rates and funding ever since then. And the last 3 years of the pandemic, well, you all know what got handed out in PPP loans and ERTC credits. So all of that, somebody has to pay for, and that is going to be us. So now we have surpassed $30 trillion. And we did that in 2022. We are at 31.4. I just can't fathom that amount of money. The government spending on interest and debt is rising to our debt. So at 5%, the interest on $30 trillion is $600 billion, right? That is a significant portion of the government's annual budget. This creates serious implications, right? If you think about your own budget, right? If your mortgage went up and you have fixed incomes, something else has to be cut. Same with the government. So let's look at what that $31.4 billion is comprised of. First, it's public debt, right? It's T-bills and government debt held by individuals, corporations, foreign governments, all of those things. And then there's intergovernment lending, like when Social Security needs money, except generally they try and take it from Social Security, not give it to Social Security. But it's debt held between the arms of the government itself. And now, if this debt ceiling is increased, which I expect it most certainly will be, the debt will be higher than our gross domestic product for the first time since World War II. And increasing national debt results in higher interest payments by the government, which takes a larger share of the government's budget. And high debt levels may shake market confidence. What does that mean? Well, market confidence rolls down to consumer confidence, and that's how confident we consumers are about the future of our economy. And it feels like we're starting to be less and less confident than we were before. So high consumer confidence lets us all go spend money, right? We buy new TVs and houses and cars, and we're just totally ecstatic about our future and that things are going to continue to get better and better and better. Low consumer confidence means that we save more. We don't spend as frivolously as we once did. It may also mean that we don't have the same amount of money to spend, and we may or may not still have a job, because business invests in the government, and the lack of confidence by business leads to lower investments It can impact hiring and expansion, right? In our own firm, when we're confident about the future, we hire people so they are trained and ready when we add new clients. When we are a bit concerned about the future, we may hold off hiring until we actually need that person. Our long-term planning, all of our long-term planning becomes much more difficult. And a healthy economic system promotes a healthy business. A scared business helps shrink our economy. So it doesn't just affect us here, it affects us globally. Much of the T-bills, meaning the government's debt, are owned by foreign companies because since World War II, the United States has been the safest haven for foreign investors. Our dollar has remained solid, and at least so far, we have never, ever defaulted on our debt. We are still the world's largest economy, and a default on this would have a ripple effect around the globe. So that's why these negotiations have a global impact. It also has a huge impact on our own economy. The debt ceiling limits the government's ability to pay bills. And you know what some of those bills are? Medicare, Medicaid, Social Security, retiree pension payments, all kinds of things. So a default on that has a ripple down effect on each and every one of us. And small businesses are particularly affected by this trickle down of the debt. So what happens if we default? Well, I don't think we're going to default. I don't think that the government, even though they cannot agree with each other, are actually going to let default happen. But like I said, if it goes up, which it will have to, the $640 billion we are currently paying in interest payments will go up because the amount of money will go up. You know what that means? How does the government pay for their bills? By money from us taxpayers. So our taxes are going to go up, and the probability of a deep recession goes up exponentially. Politically, defaulting on the debt would damage our reputation, both domestically and internationally. As I said, T-bills have been the safest haven around the world for investments since World War II. We're also going to be borrowing money from the future because someone is going to have to pay this back, whether it's me, my children, my grandchildren, or somewhere farther down. This debt just doesn't disappear. The current negotiations have been extremely contentious, as we have seen on the news. Each side is using it to move their own agenda forward. And once again, who's going to suffer are us, the citizens. So there's going to probably be, as it has done in many years before, very last-minute deals so that one side can get an edge over the other side. But what's going to happen between now and then, as you've seen with the stock market in the last couple of weeks, uncertainty creates fear. Fear creates a pullback, right? When people pull back, they are not investing, they are not confident. And these negotiations can be and have been very lengthy and intense. So it's a solution. I don't know what the answer is, but I can guarantee you it's going to contain elements that will require the government to reduce spending. It will increase revenue. How are they going to do that? Through increasing taxes. They're going to attempt to control entitlement programs, and hopefully they're going to create some stimulation and stimulus packages to encourage economic growth. What are the consequences of debt default or whatever deal they make on small businesses? You all know small businesses run this country. 99% of all businesses in the United States classify as a small business. Yes, you hear about all the big ones, but in terms of number of business, it's we, the small business owners, that run this country. But it's going to affect us very dramatically because, as we saw with COVID, almost everything we use is imported in somehow. Even the masks we tried to buy were all made in China. So when there's worry about the dollar, the value of the dollar falls, which means everything we buy internationally goes up. Small businesses are dependent on imports in whatever fashion, right? Even if you buy it from Amazon, Amazon bought it from somewhere else. And the cost of imports is going to increase because the value of our dollar has decreased. So there are going to be higher prices for consumer products, higher prices for business products, which in the end will impact our cost of doing business and reduce our profit. If you want to borrow money, right? Many small businesses live either on a line of credit or they're looking to borrow money to buy equipment or expand. The landscape around borrowing is going to be completely disrupted. Defaults or rising debt will lead to economic instability. Interest rates tend to go up in economic instability, and it's already doubled in the last, 12, 14 months. Interest rate hikes make borrowing more expensive. You may not be able to afford that loan at the new interest rates. But more than that, we are now coupling debt issues with banking instability, as we've seen with these bank failures. Higher interest rate means the banks have less money available to loan. So even though you may have stellar credit, your bank may not have the ability to make a loan for you. So Federal Reserve is suggesting that interest rates are going to continue to climb, which may make banks continue to be unstable, which means our access as business owners, our access to capital may be compromised. Rising interest rates make doing business more expensive. Higher borrowing costs impact our ability to afford new employees, to buy new equipment, to change locations if we're trying to grow and get a bigger business. We, as small business owners, need to assess our borrowing needs and prepare for the impact. How do we prepare for that? We make sure we have a line of credit. We make sure our line of credit has availability on it. And we look very, very carefully at what we're spending and try and cut out any frivolous things or things that you may be able to delay for 6 or 12 months. You may not actually need a new piece of equipment. May be able to repair with this one and hang on for a few more months before you need another one. All of this affects consumer confidence. And why does that matter? Because people who are not confident in the economy don't spend money. Small businesses rely on consumer spending for revenue. Consumer spending could fall by 10% or more. And a reduction in that spending affects our revenue, which affects our profit, which affects our ability to continue to maintain our businesses. A default could trigger a recession, which would disproportionately impact small business owners versus large businesses. And on the heels of COVID and everything that's happened in the last 3 years, we may not have the resources to weather yet another economic downturn or other disruption to our business the same way large businesses can. So how's it going to impact your business?
So thank you, Cindy, so much for that excellent knowledge and insight on the debt ceiling and generally how it affects the economy. Now let's talk about a little bit about how it impacts your business. Sorry, I'm trying to go to the next slide. Okay. Why should you care about the debt ceiling, right? It, as we spoken earlier, it affects the stability of the economy, right? If there's debt ceiling, we can't borrow more money. There's no money flowing in the country, and that ultimately affects the stability of the country, economy, and the country. Also, it affects consumer spending patterns. People are going to start saving more money and spend less, so that's going to happen. Ability to borrow money and finance operations, that's going to be tough. Banks will be very, very about lending anybody any money. So now you can't borrow money, so you can't grow your business. And overall, all of this basically affects consumer confidence. Consumers are going to step back again, and they're going to say, "Okay, I can't do anything. Let's hold off." So how does a decline in consumer confidence affect your practice, right? So what's specifically going to happen for the dental and medical market is a lot of the elective procedures are going to be, they're just going to not do it, right? They're basically going to say, okay, let me just wait on the veneers and just wait on the cosmetic surgeries that we would normally, they would, 6 months ago, 8 months ago, they were probably like, oh yeah, you know what, I've got all the money in the world, I'm going to do it. Suddenly they're going to be like, okay, I'm not going to do it. So, which brings about number of patients are going to reduce, correct? There are two reasons for that. Patients are going to reduce. One, they don't want to spend the money, correct? Two is they're going to be basically, a lot of them might lose their jobs. A lot of bigger companies are going to lay off people, not hire people. Thus, they will lose their benefits. So that's going to have a problem where they're not going to spend any money. And that's going to affect your revenue. That's going to affect your profitability. And then ultimately, that's going to be very, very important in keeping your doors open. So we've got to be very careful about that. So technically, the consumer confidence is very important, especially for our healthcare market. So what happens in the case of a default? Let me tell you something. It's not going to be fun. If we default, it's not going to be fun. There's going to be a lot of turmoil. Cindy mentioned before, even though it's a poison that we have to eat, right, or drink, whatever you want to call it. But if a default happens, that's it, right? Banks are going to stop lending money. There's not going to be a lot of money circulating in the economy. So it's going to get extremely expensive. Interest rates are going to go up. Definitely, interest rates will go up, and it's going to be very, very difficult to borrow money. The dollar value is going to go down. So that makes, something which was costing you $10 is going to cost you $15 now, just because the value of the dollar went down. So it becomes expensive for us to run our businesses. Difficult to expand or hire new employees, right? People are going to ask for more money. Now, guess what? We've already shrunk revenue because people are not coming to get treatment done. But at the same time, now we've got to pay more people because expenses are going to go up. Interest rate, because of the interest rate, the actual cost is going to go up. The biggest thing is going to be, one of the other places where the revenue will stop is your Medicaid and Medicare revenue will stop, because guess who funds those? That's the government, right? And if the government doesn't have any money because we've run out of it, right, then how are we going to fund all that? So that affects directly to our practices. And unfortunately, a lot of you I know accept Medicaid and Medicare in your practices on the dental and the medical side. And that's going to be a huge, huge, huge hit. Most of you have applied for ERTC, the Employee Retention Tax Credit, and have gotten approval or waiting to get approval that you're going to get that money. But the IRS is not going to have any money to actually, the Treasury is not going to have any money to write checks to send it to you. The IRS does it on their behalf. But I mean, IRS kind of administers it, and the Treasury kind of sends out the check, but that's not going to happen because there's no money. So again, default is going to be a bad thing. How can you prepare for a possible default? You can't do anything at the macro level, right? But you can do everything at your practice level. You can definitely diversify your patient base. If you're only treating seniors right now, you probably try some marketing and start getting more of a younger population base, right? You can reduce your expenses by minimizing waste. A lot of times we would have, hopefully you're already doing that right now, but this would be taking a step further, that we're not doing any unnecessary expenses that we would normally do in the quest of growth. Now we've got to be very careful. So a marketing expense, I'm going to be okay with it, but then, spending on some fancy medical equipment, which is going to hopefully increase revenue, might not be a good idea right now. You can negotiate with your suppliers for better pricing, because they're doing the same thing what you're going to do, keep their customers. So if you can basically negotiate with them for better pricing, they'll be probably willing to bend, right? They're really probably willing to do that. And you could explore financing options before the debt ceiling is reached, right? So already, as I mentioned earlier, you could already talk to your bankers and see if you can do that. And believe it or not, you could actually buy insurance against the possibility of default. So, maybe that might be an option, right? That might be an option, and you could talk to your insurance agent about it and see if there's an opportunity to get that. You can review your cash flow projections. Hopefully everybody's looking at, on a monthly basis, your incomes and expenses. We try to provide those reports to you, but have a robust understanding of where your money's coming from, where the money's going out, and you can have to maintain a good amount of cash reserve to cover your costs during revenue reduction, right? So your rent's going to still be on. Unfortunately, you're in a lease and you're not going to go anywhere. So Landlord's not going to say, "Oh, sorry, by the way, the debt ceiling has not, like, they didn't do a deal and we've defaulted. I'm not going to charge you rent." It's not going to happen, right? They're going to kick you out. So again, income expenses, look at the P&L very closely, and make sure you know your finances. You can already secure financing options. I've spoken about this multiple times. Engage in conversations with your banker. Now is the time to kind of make sure that that relationship you built over all these years is, you're utilizing them. If you have existing line of credits, let's make sure that you can access them, and you can access them and have capacity to use it during economic turmoil if we need to. You can diversify suppliers. So during COVID, we all kind of saw how we had difficulties getting some supplies. People were crazy behind PPE because we were not manufacturing in the United States. But that being said, we need to look at more domestic options to offset these risks, and hopefully not have the same problem if the supplier cannot supply you your essential needs of what you need to run your practice. So you want to make sure you have 2 or 3 suppliers that you're working with and have good relationships with. So if one cannot fulfill it, then the other one at least can. Now, we've spoken about reducing expenses, obviously, getting line of credits and all that fun stuff. But the most important thing is maintain your customer base, right? Increase your customer loyalty. You've got to build stronger customer relationships. You probably already have strong customer relationships, but you've got to build them even stronger now. Introduce loyalty programs, personalized services, high quality service, right? Customized service can build loyal customer base. I know a lot of you are already doing that, but again, now you got to take it to the next level, right? Ensure steady flow of business. Even this all ensures a steady flow of business, even times in decreased consumer spending. Believe me, they're going to come to you. They are coming to you right now because they trust you as their healthcare provider, and they're going to still keep coming to you as long as they keep understanding why is it important to keep coming to you. So even if it's an elective procedure, which we as the doctors might think that, oh yes, this is important for them, but they have different priorities. It's your duty to make them understand why is it important to get it done. You got to innovate your business offerings, right? You got to diversify your product and service offerings. Maybe you can develop a much needed product, which initially was not very profitable, but now in this situation, you might have to improvise and do that. Example would be a general dentist kind of could try to do some Invisalign, maybe, right? Something to that effect, where you might still want to diversify your products and service offerings. Maybe have an in-house dental plan, maybe have in-house medical plan, financing plan in-house, assuming we can survive, assuming we can finance it, right? And you've got to emphasize, I mean, that's in any period, any time, right? You've got to emphasize the long-term importance of maintaining physical and dental health as well as mental health, right? All of these things are connected, and you've got to, during this time, a simple cleaning might be, $100, $200, but if that turns into a cavity, turns into a root canal, that's going to cost them thousands. So let's make sure we tell them about their 6 months regular visit to the dentist, a yearly health checkups to the medical practices. Got to just do it. There's no choice. Now, interesting thing is this is a really interesting time. If you're seeing a lot of cash, if you have really good credit, and if you are seen as a low risk borrower, this might be a perfect chance to buy other practices out there, right? A lot of practices are going to have problems, and if you're the stronger one and you can actually acquire a lot of these smaller practices, man, this might be a perfect time to actually make that move and make yourself. So this is a classic investor's theory, right? Like when everybody gets scared, like this is what founder of Berkshire Hathaway, Warren Buffett, kind of says, is like, this is the time when, if we have our finances properly and we have cash, this is the time to go out and look for good practices that we might be able to get for really, really cheap, really, really cheap. So, I mean, all of these things, what we just mentioned is now just kind of summarize it, right? The impact on the small businesses is going to be severe, right? It could be severe financial and political turmoil. Small businesses, unfortunately, would be disproportionately impacted by the resulting economic turmoil. We are a very important piece of the economy, and the default's not going to be fun. But again, we're a resilient bunch, right? We've seen a lot of this before, and we will see a lot more coming in the future. And that's why the American small businesses are one of the strongest, I would say one of the strongest community out there is us. And but what we can do is by understanding the potential impact of that default and taking the strategic steps, we will continue to strive. I can guarantee you that. And all of you, I know for a fact, are capable of surviving this and making sure that your practices keep thriving. So, kind of summarize, what can you do for the steps for mitigating these risks is build strong customer relationships, right? Making sure that your offering are diversified, things you can do. Oh, so let me talk a little bit about this. Yes, making sure that your customer relationships are, I will keep saying that again and again. Customer relationships are going to be a number one weapon in this war, if I may say that, to combat the turmoil. So now is the time to build those relationships again and strengthen those relationships. Now, what can you do to influence debt ceiling? You can contact your elected representatives, right, to kind of voice your opinion of what you want them to do. You might be on one side that, okay, you know what? At one point, we have to do what we've got to do, and we cannot keep borrowing for the rest of our lives, and we've got to put an end to it. Or you might be like, okay, we're gonna fix it. Like, debt ceiling has to be raised because otherwise it's going to be complete chaos. But you've got to voice your opinion on that. You can join and support small business advocacy groups, which do the same thing. You can talk about this, right? You can join these groups and understand more about this. What we've given you is just the tip of the iceberg. There's so much you can learn about this that can, you can then positively impact your business, the economy, and overall everything. And share concerns on social media, other platforms, and specifically vote in every election, right? Inform yourself about the candidate position. See if that's what you agree with or not. So these things are extremely important to make sure that we're, as a country, are going in the right direction. So that kind of concludes what we have put up here. We wanted to take this opportunity to explain to you guys a little bit of what we feel and what's going on out there. You hear a lot of news. Again, what we've said is not anything new, but you've got to be aware of it. We thought this would be a nice way to kind of connect with you guys, right? Again, and share our views on it. We're more than happy to take any questions. Please email us any questions you have or comments you have, and you have our contact information. We look forward to hearing from you. Have a very, very good day or night whenever you're seeing this, and hope to see you guys soon.